Right, so welcome everyone. I believe that we have some new members in this first meeting of 2021, so welcome to the new members as well. And yeah, let's go straight for the meeting. If you have any question, just unmute yourself or type them on the chat, and we will gladly answer your questions. So, Dan, let me share the screen.
Yeah, cool, man.
Yeah. Right, all yours, Dan.
Yeah, nice one. So first off, hope everyone had a good exam season. Hope everyone done the best they could and had a nice little break over Christmas and New Year. And yeah, and I just want to welcome the new team members that have just joined for semester two. So welcome to the team. Hope you enjoy yourselves. The format of this presentation will probably be the same throughout. This was the same format as semester one, and it seemed to be pretty good and successful. So we'll just jump straight to a market overview, I think, on Sol. If anyone has anything else to put in, just put in the comments and we'll expand on it afterwards. So don't be shy, kids. Brexit has been causing huge headaches for European shipping issues, especially with importing from the rest of Europe in the form of tariffs and extra taxes. A lot of people are diverting their online shopping now and just flatly returning products, which isn't ideal for the already flat retail sector. Moving on over to the US, Biden has started to reverse some key policies. As far as I'm aware, he's reversed some trans rights in the military, introduced some tax laws, and started clamping down on the wall that Trump built. In reference to what Toby just said there about Reddit stocks, Reddit versus hedge funds is still going on, and I'll chat about that later on tonight. But it's quite an exciting topic nonetheless. And I'm sure plenty of you have seen it all over social media. In other news, the UK has quietly extended the lockdown to around March, I want to say, off the top of my head. So that's very up in the air, especially with schools going back, especially with universities like ourselves. In relation to the vaccine distribution, India's facing a huge issue right now. They've got a mass supply of vaccines, but nobody wants to take them. But herd immunity started to take over, which is positive. Despite that, just in general, vaccine distribution across the EU has been horrific. It's likely to continue. I can't really see another solution coming out of it, especially with the recent Brexit debates. In other news, non-profitable tech in the US has absolutely skyrocketed, especially with the new data that Goldman Sachs have produced. Side note of that, I'm actually writing an article on that for Leeds Insights, so be sure to check that one out when I release it. Egypt's facing some futures scarcity, especially with water. I think this is related to the farming and agricultural sector, I believe, but please feel free to correct us if anyone has any extra information. This week, the UK applied to another transnational trade group across over the Americas, I believe. It's very shady, no details have been released yet. I believe they're keeping the cards quite close to the chest still, just to get the deal sorted and signed. Across the other side of the world, China's took back #1 position for the highest amount of foreign direct investment globally. Huge news, especially for a good COVID recovery. With Asian equities going to really bounce back quite sharply compared to Europe. Jump back in the retail sector, Debenhams have been acquired by Boohoo for 55 million. This includes all their assets, including buildings, and they're basically going to strip them out, sell them off, get rid of some debt, and move the brand image online, I believe. And Boohoo, on that note, have claimed 387 million left for M&A. Retail's going to heat up. Really underrated sector right now. It's really flat, especially given the lockdown. So yeah, if anyone else has any news, feel free to chime in. But that was just a quick
Dan, can you
concept.
explain a bit more what FDI is?
Yeah, so foreign direct investment is any form of investment into another country from another. Um, so the UK could invest into China. Maybe they might buy some sovereign bonds, sovereign debt, and that would be considered foreign direct investment. And vice versa, it swings every way. Um, so yeah, I think that's a pretty concise explanation, Gonsul.
Thank you.
You've got any news to share?
No, I mean, that's a good wrap up for everything that's happened for the past weeks or this year, I would say.
Yeah, has anyone else got anything? Feel free to chip in.
Just on the China point, I know that they put a really good Q4 growth figure out, and I think they had an overall like GDP growth of like 2%. Well, I think low single figures for the year in 2020, which is obviously incredible given what's happened. So yeah, it just shows that their economy is kind of pumping and it's back to normal levels. But yeah, I know that their Q4 growth rate was especially good.
Yeah, it's insane. I mean, Asian equities are going to boom, especially small and mid caps, compared to the large caps, because the mid caps have got the room to grow. Really going to benefit from the government support. So yeah, in terms of the Reddit stuff, I'll go over it now. So we've covered it. I'm sure plenty of people will be excited. So essentially, Wall Street Bets have took in this company called Gamestop, and the reason they've done that is because GameStop has been overshorted, and short selling is simply betting that the price of a share will go down. But the way you do that is you borrow a stock and then you buy it back at the lower price. And the difference between the prices is either the profit or loss that you make. But GameStop had a short float of 140%. So another 40% of the stock was overshorted. And what happened was Wall Street Bets just latched onto it and sent it to the moon, and is what they would say. And yeah, the cent skyrocketing. Hedge funds really got burned because I had to buy it at a higher price. And yeah, simple as that. Moving on to the next slide's gone, so yeah, market coming at 2021. I'm going to keep tonight quite brief, to be honest with you all. They've just totally detached themselves from the actual economy. Any economics textbooks you've read, just throw them out. It's absolutely pointless at this rate. More special purpose acquisition companies, more IPOs, and more stimulus than we've ever seen, even compared to 2008's financial crisis. On that note, COVID recovery is really split. Developed countries are really suffering right now compared to Asia, who locked down sharp early and are now flourishing in it. I mean, Europe and the US are fighting a crisis. But saying that, recent reports have went on the FT tonight, vaccination rates higher than the amount of infections globally. So tonight could be a turning point. Next slide. Yeah, so I'm looking at the wider fund meeting cover our portfolio, just for ease, just to keep tonight short, because I know we've had a private equity call like half an hour before this. So yeah, jumping straight into it. Current holdings. The strategy revolves around some ESG, so environmental, social governance, equities, bit of electric vehicles, commodities to match. So copper miners, silver miners, gold, lithium, etc. We've got some technologies in there as well, and we've got a pretty vertically integrated supply chain. And so vertical integration means we own a lot of equities that are involved in the whole process of the vaccine. So we hold vaccine producers. We hold glass makers that supply the vaccine producers, and we also hold the vaccine suppliers themselves, as well as global shipping companies to export it across the world. So we're benefiting across the supply chain, which should in turn really be profitable, which it is. I mean, naturally, very geographically diverse. We've got hedges against the US in the form of the rest of the world equities. So whether it be European equities or Asian equities or North American, we're really, really well hedged and diversified across the board. So should be quite protected from any economic events. We are playing in the big trends that could benefit from Biden's presidency, especially ESG. Thanks to Jamie on that one, who contributed them holdings. Early investments in the blockchain really paid off, especially Argo blockchain. So if anyone's interested in crypto, obviously Bitcoin went on a bit of a rally recently, and Ethereum is just hitting a new all-time high tonight. So blockchain's going to be absolutely hitting it big as a result. Moving on, commodities, copper, lithium are really increasing in demand for EV holdings, and so if more demand, price goes up, miners will cash in on this, so the equities will go up, and our portfolio will in turn be more profitable. And I've already went over this, but the vaccine supply chain is global, and any issues are sovereign, so they're quite individual. So whether that be a supplier's production facility in Belgium, such as Pfizer, we're not going to really be exposed to that because we have more of a global outlook. And even if there is issues, the shipping equities that we hold kind of cover that from the online shopping trend that's going on, especially with Amazon reporting huge earnings recently. But in the funding, we'll see every individual equity with return on investments of each, which is quite high. Moving on, I think. Yeah, this is a key one. How we aim to adapt it moving forward. As you know, the stock market is very forward-looking, so we need to play into that. Due to the nature of the competition, we're going to have to wind down positions and turn equities into cash again, obviously to tally up who won the competition. So we really need to time our divesting times correct and really take profit when is optimal. But on that note, US equities look really fit to continue their rally. Ever since the March dip, they really grew from the natural stimulus packages that Trump put in, as well as the one that Biden is rumoring as of now. So there seems to be no end to that, really, especially as Reddit and Wall Street bets continue to pour their checks into the stock market. And again, clean energy is growing, it's really fit to maintain current valuations. So is electric vehicles. We actually hold Enphase Energy, and we bought them quite early on. And during our holdings, they got an S&P 500 inclusion, so that really skyrocketed. I think we bought it at like 120. Then now I'll hit an all-time high, I think 220 or 230. The rest of the world has a lot of room to grow as well, because they seem to be rebounding economically compared to others. So when economics are quite broken, they tend to be quite realistic, which is positive for once. But this is the real challenge. We've got a really large cash pile, 200k plus. We've got a lot of cash, so we spend it. Partly due to my inability to do this, to allocate funds properly, or maybe being too risk averse. But here we are.
Dan, what do you mean when you say that economics are broken?
Economics are broken. So traditional economics usually would revolve around maybe large macro events such as a US employment figure, or maybe a GDP growth in general. but obviously since COVID came along, GDP growth has been quite negative, quarter on quarter, which is known as a recession. Employment is continue to be either negative or very, very slow. But despite that, despite record amount of dollars being produced, the stock market is hitting new all-time highs, which should never be happening, ever. It should be doing the complete opposite. It should be on its knees. But it's not. It's the opposite. And we simply got to play into that. So do we enter new positions, or do we top up current holdings when they dip, is the big question.
I would say, or I would go for the second one, because I don't see things going much higher from where we are right now. But that's something that we have to discuss.
Yeah, definitely. I mean, today or tonight is definitely a more introductory session for the new members and just to round everyone up. But definitely, I mean, for the next meeting, we need to come to the decision of topping up current holdings, or just select holdings, or totally new positions. I mean, I'll defer to the rest of the group. What do you think?
Can I ask when is the end date of the competition?
Probably end of March or so, I think.
Okay, so 2 months left.
Yeah, I think it is before the Easter break. I think that's the thing for the past years.
Yeah. Why? What are you thinking, Jamie?
Because I was just thinking that will obviously affect what kind of assets we want to buy. If we think that the extended lockdown might have a positive effect on travel companies for summer, I'm not saying that is likely, but if that was the case, then obviously that's not out of the range for our competition. The competition is going to be done before that is going to have any effect. I was just thinking, and like retail, like you said, it's kind of underestimated at the moment, but if the lockdown's still extended until March, there's no point getting in any positions there if we're ending in March.
No, I definitely agree with you. I think time scale is a big thing for us. I mean, if I was personally investing, I would totally look at that. It's a great idea. It really fits into the macro trend. But the fact of the matter is, we've got 2 months. So yeah. Natalia, what do you think?
I'm not particularly sure, but I do agree with James when he mentioned retail and holidaying as well.
Haley, have you got any opinions on this?
Yeah. So, of course, it's not gonna have any effect if we do any if we invest in retail in Europe. But what about other economies that are in and out of lockdown now? Like I don't know the situation in Australia, but like for example New Zealand, some Asian economies. I'm pretty sure, like I'm hearing South America. South America is not good right now, like with the Brazilian and all the strains. It's not a great situation, but I think we could explore other economies that are benefited from this, or that are in a better position compared to Europe. Not only the US.
Yeah, I totally agree with you. I mean, I've got some proprietary data from someone called Callum from Top Down Chart. He's on LinkedIn. Probably check him out. He's really good. Yeah, small mid-cap Asian economies. Small mid-cap Asian equities are doing very well right now. They've got a lot of room to grow, especially compared to the bigger ones. I mean, Alibaba has fell off a cliff this past quarter. Same with JD. But then you look at Jumia, which is dubbed the African Amazon. They're not doing too well, probably due to Africa's continental handling of COVID. But in general, market is quite toppy. The market is at all-time highs, and I recently took a play on Morgan Stanley for the investment bank beating earnings, because I ran some comparable tables, and every bank was on par to beat their earnings by and yeah, we end up losing a touch of money on that, which just shows how toppy the market is. A lot of things are factored in. So yeah. Toby, do you have any ideas?
I think, sorry, just to jump in.
Yeah.
In terms of topping up our current positions, I think that could be the best alternative, because we've already got an ESG focus. I think that's where the most optimism is going to be, with Biden coming in, and obviously the UK has got similar goals with the EU as well, trying to hit kind of 2030 targets for carbon. They said that petrol and diesel cars won't be sold after 2030, hitting carbon neutral by 2050, which is really ambitious. So they've got to get started as soon as possible. It's quite aggressive. So I think that's the best option. If we've already got an exposure to ESG companies, especially that sustainability companies, but yeah, I think we should just concentrate on these. That's my opinion.
Do you think it's quite safe, or because I think that's quite a safe investment? It's quite preservative of cash.
Yeah, but we can afford to be conservative if we're winning, right?
Yeah, we are winning. I've seen some early charts from Jacob and Alex. We are a fair bit ahead. I think we are 400k right now, so just over 40%. And that was exclusive of GameStop hitting, I think, $500.
Did we exit GameStop?
No, I couldn't find liquidity. But at one point, we had $8,000 invested in them. It turned into over 280k.
Fuck it. Sorry.
No, go for it. It's insane.
Yeah, that's nuts. Absolutely nuts. But it went down like 60% today, didn't it, or yesterday? And
yeah, but still 400% up.
Yeah. Do you reckon that's because hedge funds are trading with each other still, or is it just market value? Well, the market value. People just stop holding.
No,
because the first few days they started manipulating the market, trading with each other, so it looked like it dipped, but it didn't necessarily dip.
Yeah, the big issue is supply. There are a lot of retail investors obviously weighing in on this and providing a lot of the volume and demand for it. Obviously, the supply isn't really there, and what supply is available is being taken up by retail investors. But since trading has been restricted or totally took away from the retail investors, on the likes of like Robinhood, Trading 212, I think IG Trading, name a few, the volume just disappeared overnight.
Yeah.
So the demand just isn't there, and so price dips. The hedge funds can still get burned, but they are covering the shorts for a lot cheaper. I think one important thing to note is what Toby said about Reddit stocks as well. Melvin Capital, they're the big bad guys in this, right? They've delivered investors for the past, I think, 6 years, 50% year on year. And so this is nothing for them. They're still up in the green. But I think there's like 1 or 2 more slides.
Right, let me go for them.
If anyone has any questions, just feel free to whack it in on the chat box, or just turn off your mic, turn off your mute, and just go in for it. Yeah, why death funds mean usual format as the others. I'd appreciate, obviously, new members don't know what that format is. So, Gonzalo, feel free to correct us here. So essentially, it'll consist of all the other fund teams coming together, and the fund managers, so Jacob and Alexander, and head of PMs, Jay Hughes, will essentially kind of comb over the portfolios, kind of providing some data insights, so return on investments, chart on the returns, maybe graphing the diversification. It's nice to hear from other teams, kind of walk through their strategies, through their holdings. It's really open, really easy, it's no stress. Saying that, it's crucial that we analyse other sectors of the economy because no two teams really hold the same outcomes. We've got totally different strategies, as far as I'm aware. And so it's always good to kind of take an extra set of eyes at other teams, especially just like break down what their thoughts are and how we can benefit from it. And we certainly have, because we took a very different approach from others. I mean, if you can't attend, it's only a detriment to yourself, as the fund managers can provide some really invaluable investment advice. I mean, Jacob is a PhD student now, doing financial mathematics, I believe. Jay Hughes is in a placement year with Redmayne Bentley. And Alexander is a Deutsche Bank, he's an offer holder for when he graduates. So they're all very smart individuals, and even better as a team. And Gonzalo's finally a maths student, so he's maths on that forefront as well.
No, I think this fund meeting probably is the next fund meeting is probably the most important one so far, because I mean we haven't had one since early December, and the fund managers, I guess, they will have plenty to say, and it's been 4 months since this started, so yeah, I mean they will have a lot to say about each sector. So yes, very important one to attend.
No, definitely, totally agree with you. There's one more, just move on there. Yeah, so regarding strategy moving forward, pitches, new stock pitches. I'll say we are more than happy to facilitate new positions, but they have to be well researched, and they're not going to be taken from Wall Street bets at all. That is just a ground rule. We've already got Gamestop, we've already got Palantir, and we've already got Neo. Technically, yes, Wall Street bets positions, however, very well thought out, fundamentally and technically entered on our behalf. So they're running a good profit. It's important that they fit into our strategy moving forward. You've had an insight into the strategy. I'll give a deeper walkthrough in the next meeting, because tonight only serves as an introductory session really to onboard the new members and kind of get everyone together for the first time after a while. So for those that were here last semester, you know the format. I'll put it in again to the next set of slides, but it's very straightforward and very concise. And so I'll put that in the next set of slides, I'd imagine. And then more than happy to facilitate new ideas, new strategies, new positions as a whole. Gonzalo, anything to add?
Yes, can we go a bit through our positions right now on ex ante? What do you think?
Yeah, go for it. I mean, the critical update's done.
So, I mean, tell us a bit about the most important positions, both in the ones that we are making money and the ones that we are losing money.
Yeah, so market's been a bit of a bloodbath. It's had a huge sell-off this week. I know the major indexes sold off negative at the end of January. There's a bit of a rotation out of the hype stocks. But this is the first time we've seen red for 4 months, really. Most of the time it's been in the profit. So I'll go from the top. Really. Is that the very top console?
Yeah.
Yeah, cool. Tata Motors. This was a suggestion from an analyst part of the group. Engine car company. They dabble in a bit of steel. I think they do own Jaguar Land Rover. I believe. And they're doing quite well, despite the economic hardship globally and in India. But good position size. It grew over time, and very well in the profit. What's the P&L on Tata console?
What did you say, Dan?
What's the P&L?
66,000.
Yeah, 66k just on one. It's not too bad.
Yes. Actually, let's explain quickly what these green and orange lines mean. The green line is the mean price at which we bought the shares. So in this case, 9.28. The stop loss is at 8.2, and the shares are right now at 22.66. So I mean, it's a pretty good, pretty good company that Omar told us, and it's done really well. Very impressive.
Yeah, definitely.
Because I mean, at the beginning it was like, well, yeah, let's put some money in Tata. Look at it right now.
Yeah, it's flying. It's flying. Actually, conveniently, Gamestop is below. So it'll be interesting to look at their chart. Currently 50 or 40k up on that. We're worth nearly 300k up on that. You can see exactly where the buy-ins have been in the form of the white triangles. If it's pointing up, we're bought. If it's pointing down, we're sold. So yeah, a lot of volatility, which is good really. A lot of volatility means space to profit. If anyone wants to take any further research into the VW short squeeze, it'd be very insightful, because VW rallied to 400 euros from about 100, but then it was in the red for about a week, Monday to Friday and then Monday to Tuesday, before it rocketed up to 1,000. I think that was back in 2010, but conditions are different now. New wave of retail investors taken to it, and with limited liquidity and trade limitations, we might not see the same effect. But we're currently sitting at 40k profit on it. Could have cashed it in, took a risk by not, but obviously limited by liquidity issues nonetheless.
What else? Oh, Moderna, interesting one.
Yeah, Moderna, I'm sure all of you have heard the company all too much now. Big vaccine supplier. I know Natalia has a lot of experience in the pharma sector and biomed, because it's her degree, well, master's course now. So she could provide advice.
Sorry, Dan, do you know what happened this 29th of January, so kind of 4 days ago?
They basically came out with some efficacy results, I believe. And that's when I took a bit of profit. I think I took 40k profit from it.
Okay.
It turned out to be a good call because it did dip slightly.
Which I guess is this triangle here, white triangle?
Yeah, so
okay.
Triangle pointing down, we sold some.
Okay.
I think PayPal is just above that. Yeah, so I'll quickly walk through this one. They had a bad Q2 earnings call, underperformed, not horrifically, but they underperformed nonetheless. And PayPal are fundamentally quite a safe company. They've got Bitcoin on the balance sheet, which is always fun. And took a gamble, and it turned out to be all right because they started beating earnings afterwards. So yeah, that's that one explained. That's that thesis. Quickly flick through to some more key positions really. MicroStrategy that you've hovered over. This is blockchain, essentially. It's a blockchain company, S&P 500 listed, I believe. Benefits from any price hikes in cryptocurrencies, which is great. Some real exponential growth, really. So good hold, nonetheless. Might as well jump over to maybe MP, Gonzalo. I think it's further up. Yeah, MP commodities. Commodities have been a bit of a rally. Took advantage of that. Yes, they did peak, but starting to stabilise out. Commodities are seen as more of a safe haven during harder economic times, and put that with a nice ASG demand behind it. It's bound to do well. So yeah, currently up, I think 7k I can see from that. Again, allocation could have been a bit higher, but this is an opportunity to kind of build on a position. But yeah, moving briefly on, whole Tesla. Had to get in on Tesla. I was hesitant, didn't want to invest too much, but obviously it took off. But maybe that's because I'm quite a risk averse person when it comes to meme stocks. But yeah, I'm sure everybody knows the bread and butter of Tesla now. If not, it's more than easy to do in your own time. Might as well move down a touch, so there. I think APXT. Yeah, so this is one of the SPACs that we hold. We kind of took a nice position on some special purpose acquisition companies. Really volatile, thought we'd play the cards. And it's barely paying off. But that's just due to the natural volatility of it and it being pre-merger. So yeah, we're really hoping once the merge goes, we're cashing the profits. Again, I'll go over a lot of these positions in greater depth in the next meeting. So, but this just serves as an introductory. Again, like I said, and then these are the reds that we don't really want to focus on. Yeah, these are EVs, Chinese EVs, Pfizer's in the mix, UPS, the shipping company, Iberdrola, Spanish, ESG slightly in the red. FedEx is currently the biggest loser right now, negative, well, 6k. Took a huge L on that one. But yeah, it's not that deep. It's not that bad compared to others. So yeah, that's a rough outline of the portfolio for now.
Really good.
So yeah, that's nice, quick little blast off sessions. I know people had a PE session with LUUTIS, no doubt, which is quite informative. But yeah, keep your eyes peeled on the Facebook page, and I'll send out more email invites for the next session, which will probably be next week. But I've got to time it so it doesn't clash with other meetings, i.e. private equity, for example. So yeah, keep an eye out on that.
So fun meet.
Any questions first, if that's all right, Gonzalo?
Yeah. So next fun meeting next Thursday. I see here the 11th, isn't it?
Yeah.
I've got a few points, if you don't mind.
Yeah, shoot for it, definitely.
Go
I mean,
ahead.
anyone else, free to chime in.
Cool. Yeah, I'd love us to increase our position on MicroStrategy this month, if possible. And I'll do some more research and come back with some reasonings behind that. But I think that could be very profitable, especially this month. And then also, I know with UPS, they've got a lot of investments going into electric vehicles. So that fits with our kind of brand, the fund kind of theme or whatever. And yeah, the company that I came out and pitched last semester, Arrival, still hasn't IPO'd, but UPS have got a contract with them. UPS have got a contract with another EV firm called Workhorse. So I think maybe we could at least kind of cost average like to a better price. And if it does go up a bit, that hopefully we can reduce the loss on that if we can get in a good position. But
yeah, very, very valid point. We've got the cash to do so, and like you say, very diversified company fits in with our strategy. So, yeah, good call. Good call. Definitely, probably execute that one. Anybody else? Questions? Any questions, whether it be fund related, internship related, career related, just shoot for it.
I'm going to say, oh, sorry. Yeah, go ahead.
Yeah, if not, feel free to drop off. I mean, whatever Gonzalo wants to say first, though.
No, I just was going to say about the positions. I think we should increase our position in Tata, because I feel that this is not a volatile company, and it could perfectly increase its value in the next 1 or 2 months. I don't know.
I'm just charging my Mac off because it's starting. Ignore me. Toby, how did GS application go? Horrific. It was really intense. Yeah, so it was CV, and then 300 words, which was a ball ache. And then it was higher view, so it was a half-an-hour higher view process, and then it was a technical grilling on all things investment banking division related. LBOs, DCFs, debt capital markets, equity capital markets, and everything in between, valuation techniques, and a few brain teasers thrown in the mix. Agreed, high view is the worst. I applied to over 70 firms this application season, got about 8 higher views, and I got, I think, 4 offers. It was horrific. I'd never do it again. But you know, it happened.
yeah, that's
Yeah, for placements, I applied to so many. I did get a lot of high reviews, but I didn't pass any of them because I'm just really bad at high review. But yeah, I was thinking, just one thing to add. I was thinking that now that COVAX, you know, the thing to distribute vaccines freely to developing countries, it's going to roll out this month and next month, like in the next 2 months. So a lot of new countries are going to get vaccines. Should we look into distribution companies located in those areas, like South America, Africa, and some developing economies in Asia?
That would be a good thesis, really, for a trade idea. Would you be happy putting it together?
I'll look into it. Yeah.
Yeah. So in general, just kind of like an executive summary of the company, what they do, where they are, how they operate, and then maybe some comparables in the industry. So like how well they do compared to the competitors, for example.
Yeah, try to find contracts with government, like contracts with the government, because it's going to be nationally distributed. So yeah, they're just gonna get money pumped into them.
Yeah, definitely, man. I mean, a bit of a brief overview of the financials and yeah, an opinion of the share watch, really, of how the share's been trading, and that's it. Real nice and short and sweet. I know Jamie's presented a couple, so maybe drop him a message. He'd be happy to help out, I think. Good.
I think, sorry,
No, cool.
unless a great opportunity like what Matteo was saying about vaccine distribution, I think we should just extend our current position.
Yeah.
Yeah, fair enough. Definitely take that one on board. Anybody else? Anybody else? Because I know this is probably the key time to kind of chime in on trade ideas.
Yeah, I have a question.
Shoot for it.
Yeah, at the beginning you mentioned that even if economies fell into a recession due to COVID, the stock market skyrocketed for a reason. Could you explain that? Because I saw it as well, but I didn't understand the reason behind it. It doesn't make any sense to me that firms are doing exceptionally well, but the economies are not, which is pretty logical.
Yeah. So essentially, what's happened is it's the backbone of the growth in the stock market overall has been from the amount of global economic support. So the stimulus packages in the US fueled the growth for the S&P or the Dow, or the indexes, and it was the same in Asia with the Nikkei. It was the same in Germany with the DAX. And as long as they can keep kind of pumping the money into the national economy, which feeds into maybe the continental economy, so like Europe, for example, it will continue to grow because there's more money being put there. But once that money kind of runs out, then there could be a contraction. But saying that, it's probably going to come at a time when we've mostly recovered. So I don't think it will happen. But as a whole, economically, economic events such as non-farm payroll, so employment rate, or GDP growth quarter on quarter, it's very negative news. Yet we're still growing as an economy on the stock market because of the economic support we're getting. Without it, we'd be in the red, but we're in the green because of it.
And the thing is that something that is happening these days is that we tend to focus, for example, on indices that are doing very well, for example, the Nasdaq. And the thing is that the 5-10 biggest companies in the Nasdaq, so Google, Facebook, Amazon, and Apple, all of those have been making money during this pandemic, while kind of economies in the world have been doing very badly. But those companies which have a big proportion in the indices have been making a lot of money during this pandemic time. So, and those companies have made those indices go up, while economies in the world have been going down. So that's an important point as well. The economics break or broken that you said today in the meeting.
Yeah, it rings very true. I mean, traditional economics is very outdated now. So yeah, feel free to drop off if it's past your bedtime or you want to stay for a chat. But for the most part, that's the general fund meeting kind of wrapped up. If anyone wants to stay behind, happy to let you and have a chat. But thanks for attending all, and I'll see you all soon.
Thank you everyone for coming.
Cheers, guys.
Thank you.
Thanks, Dan.
Cheers, guys.
Bye.